What if I told you that, while the world panics during war, one of the greatest investors in history quietly starts buying more stocks? Yes, when markets crash, fear spreads, and headlines scream global crisis, Warren Buffett often sees something completely different. He doesn't just see chaos, he sees opportunity. Whenever war begins, the stock market reacts almost instantly. Investors rush to sell their stocks and move their money into safer assets. News channels start predicting economic collapse and financial instability. Fear spreads across markets faster than the actual conflict. History has shown this pattern many times. Markets reacted sharply during the World War II, the Vietnam War, and the Gulf War. More recently, the same fear appeared during the Russia-Ukraine war. Every time, investors initially panicked, but something interesting usually happens after that first wave of fear. Markets slowly begin to recover even while the conflict continues. Businesses adapt, economies adjust, and innovation continues. This long-term resilience is exactly what Warren Buffett understands. Buffett has a famous rule that guides his investment strategy during uncertain times. He once said, "Be fearful when others are greedy, and greedy when others are fearful." War creates one of the most fearful environments in financial markets, and fear often pushes stock prices far below their real value. When prices fall because of panic, strong companies suddenly become cheaper. Most investors run away from the market during these moments. Buffett, however, starts studying businesses even more carefully. He looks for opportunities that others are too scared to see. Through his company, Berkshire Hathaway, Buffett focuses on investing in strong and stable businesses. These are companies that generate consistent cash flow and have powerful global brands. They also tend to have loyal customers and durable competitive advantages. Even during economic turmoil, these businesses continue operating. Over the years, Buffett has invested heavily in companies like Apple Inc., Coca-Cola Company, and American Express. He has also placed significant bets on energy companies, such as Occidental Petroleum. These businesses provide products and services people rely on every day, and that demand doesn't disappear just because the world is facing conflict. Think about daily life during difficult times. People still drink beverages, use their phones, and pay for goods with credit cards. Energy is still required to power industries and transportation systems. These basic needs continue regardless of global tensions. That's why Buffett chooses businesses with long-term demand. Another powerful part of Buffett's strategy is keeping large reserves of cash. While many investors remain fully invested, Buffett often holds billions in liquidity. This cash gives him flexibility during market crashes and economic shocks. When prices drop, he has the ability to buy quickly and decisively. Imagine the stock market as a giant shopping mall. During normal times, most products are priced at full value. But during crises, such as war, fear causes everything to go on massive discounts. While most shoppers leave the mall, Buffett starts filling his cart. However, Buffett is not interested in short-term speculation. Many traders try to profit quickly from sudden price movements in defense stocks or commodities. They attempt to predict how markets will react to each headline or military development. Buffett rarely plays that game. Instead, he focuses on the long-term strength of a business. He asks whether the company will still be profitable 10 or 20 years from now. He studies its management, financial health, and competitive advantage. If those fundamentals remain strong, short-term volatility becomes irrelevant. One of Buffett's most powerful insights comes from studying history. The United States economy has survived wars, recessions, financial crashes, and pandemics. Despite all these crises, businesses continue to grow and innovate. Economic progress did not stop. Over long periods, the S&P 500 has risen dramatically despite countless global disruptions. This growth reflects the strength of companies, entrepreneurship, and technological advancement. Buffett believes betting against this long-term progress is usually a mistake. That belief shapes almost every investment decision he makes. The biggest mistake many investors make during times of war is panic selling. They watch frightening headlines and assume the market will collapse permanently. Fear convinces them to sell their investments at the worst possible moment. Unfortunately, this often locks in losses. Buffett takes the opposite approach. He remains calm while others panic and avoids emotional decisions. Instead of reacting to daily news cycles, he focuses on long-term value. Patience becomes his greatest advantage. Sometimes Buffett waits years for the right opportunity to appear. He studies companies quietly while markets move up and down. Then, when prices finally become attractive, he invests billions of dollars. This patience has been a key reason behind his extraordinary success. For investors watching global conflicts unfold today, Buffett's strategy offers important lessons. First, panic rarely leads to smart financial decisions. Second, strong businesses can survive even the most difficult economic environments. And third, long-term thinking often beats short-term speculation. War can create uncertainty and volatility in the financial markets, but it can also reveal powerful investment opportunities for disciplined investors. Those who remain patient and focused on fundamentals often benefit the most. That is the mindset Warren Buffett has followed for decades. While the world watches dramatic headlines and market crashes, Buffett quietly studies businesses. While many investors sell out of fear, he waits for the right moment to act. And when opportunity appears, he invests with confidence and patience, because sometimes the best investments are made when everyone else